Crypto Assets Valuation, an Advanced Guide. How much are your crypto assets worth? To find out, you need to understand how they're valued. This article will help you get the most accurate answer. Crypto assets valuation is a complicated task requiring many factors to be considered. Several key criteria must be met before we can determine the price of a crypto asset, including the medium of exchange value, intrinsic value, and risk-reward trade-offs. However, the first step in valuation is understanding those criteria. Medium of exchange value. The first question to ask yourself is, how do you value a crypto asset? If you can't answer this question, you must stop reading now. By the time you get through this article and start looking at crypto asset valuation models, I'll assume you have a basic understanding of how crypto assets operate. You need to make two assumptions about the pricing of crypto assets. The price of a crypto asset is driven by supply and demand. There's an equal number of buyers and sellers for every asset. Crypto asset prices are determined by supply and demand. If a crypto map has no buyers, it isn't very helpful. Blocks or virtual tokens can only be mined if held within a computer, so they must have some value. To fix this, these assets employ a pricing mechanism. There are several different ways that crypto asset prices are determined. For example, prices can be determined by market capitalization, which is the total value of all tokens in circulation. Prices can also be determined based on supply and demand for those tokens or coins. When the price of something changes, this changes because one person or entity is buying more of it than the other people and entities are selling it. What is asset valuation? Asset valuation is the process of calculating a value, or price, for something that has intrinsic value. Something that has intrinsic value is something that has a use outside of its investment potential. The way that stock prices are determined is through asset valuation. Stock prices are determined by supply and demand for the company's stock and the investor's perception of the firm's prospects. This makes sense because stocks represent equitable company assets and earnings ownership. Stocks also provide a way for their holders to participate in the company's profits through the payment of dividends. On the other hand, crypto assets are a new form of a financial asset. Previously, I defined crypto assets as decentralized, digital representations of value that use cryptography to prevent counterfeiting and fraud. While these assets aren't physical, they can store and transfer value. There is no single company behind the blockchain technology that powers these assets. An asset's present or anticipated value can be ascertained using an analytical procedure known as valuation. There is a wide variety of approaches to valuation. However, each approach has the potential to provide a unique outcome, and depending on the asset class and the business, one approach might be more appropriate than another. 1. When conducting quantitative analysis, financial analysts often rely on the financial statements of the company they are analyzing. However, crypto assets do not supply this kind of information, and as a result, standard procedures are generally inapplicable when dealing with crypto assets. As a result, the sector needs to keep researching and developing innovative approaches to valuation, given the growing interest from institutional investors. However, you do not have to be a valuation expert to evaluate crypto assets. The most important thing is understanding how these assets are valued, which I will cover in this article. There are two ways to determine the price of a crypto asset: historical and expected future value. Both of these techniques are used by analysts and investors around the world. Market capitalization, historical price. Market capitalization is the total value of all crypto assets in circulation, including those that have been destroyed and those that are yet to be created or released. Market capitalization includes the current supply of tokens and coins in circulation and their price. While it is impossible to determine the future supply of a crypto asset, there are ways to estimate it using quantitative analysis or looking at historical data. It is important to recognize that market capitalization does not include shares in an investment fund. Although these are also assets, they are not securities, which are classified as debt instruments in contrast to equity instruments. 2. The biggest difference between crypto assets and stocks is that crypto assets don't have a centralized issuing authority, such as a central bank, or a regulator, such as a securities commission. Security tokens, historical value. The price of tokens can be determined by either the market capitalization or the security token price, which is the value of a specific token at a specific moment. Certain assets have three classes of value: intrinsic, extrinsic, and financial. While intrinsic and extrinsic values are determined by security, financial values are a function of supply and demand. These types of valuations can be distinguished based on the investor base. Intrinsic values are derived from a security's intrinsic value, which is the actual value of the security itself. Extrinsic values are determined by an investor's view of the future market capitalization of a company. Intrinsic values are derived from a security's intrinsic value, which is the actual value of the security itself. Extrinsic values are determined by an investor's view of the future market capitalization of a company. Utility tokens, historical value. The price of utility tokens is determined by the market capitalization or the security token price, plus a small commission for the use of their network. Utility tokens are digital assets that provide access to a company's goods and services. This can be in vouchers for goods and services, loyalty points, such as points earned on your credit card, or rights to dividends from an investment fund. These assets are used as a way to reduce the amount of time and effort required to complete transactions. The rate at which these assets are used is directly linked to the success of their underlying organizations. When an investor pays for a product or service with a crypto asset, she is essentially buying the right to use that product or service. Therefore, they must be treated as such by the companies that issue them. Financial valuation. The financial valuation of a crypto asset is determined by the market capitalization or the security token price plus the estimated demand for these assets, as expressed in either future market capitalization or a future price. These assets are expressed in current market prices and are subject to changes. This valuation method is the most straightforward to understand, as it allows us to see the estimated value from a standard financial point of view. In contrast, market capitalization might not accurately represent the financial value of a crypto asset, for example, if a large number of assets were issued in a very short period. Another way to think about this is that market capitalization is an approximate figure based on what has happened in the past. In contrast, future valuations are not directly tied to any historical data. Conclusion. Every crypto asset is unique, and while the two valuation methods discussed in this article can provide accurate valuations, they must be used with caution. This is because there are several factors that you cannot control and thus have no say over. For example, market capitalization is based on the number of coins in circulation at a certain time and does not consider future numbers. Moreover, it does not account for potential changes in demand. Market capitalization is not an accurate reflection of the intrinsic value of a crypto asset. On the other hand, future market capitalization can be a reliable indicator, as these are based on historical data that investors use to evaluate the potential value of a crypto asset. In addition to these considerations, companies may need help determining their valuations. This is because they need to know their actual demand and thus cannot calculate the value of a utility token in advance. These are only a few examples of how crypto assets can be valued and are yet to be fully explored.